Great. Should we get started?
Sure.
Yeah.
Well, welcome everyone. Thanks so much for dialing in today to BXE Capital's panel on our 3 experts discussing cryptocurrencies. And thank you, of course, to the wonderful lineup that we have of panelists. We have Josh Sroge, Matt Kaufman, and Josh Finkleman. My name is Alla Rubenstein. I am the Investor Relations Director and Compliance Officer at BXE Capital. We are Colorado's first digital asset investment fund in the state of Colorado, and I am going to be your moderator today. So aside from the esteemed roles that you see on your screen here for each of the individuals, I'm also really excited to let you all know that each of the folks here today on the panel are also partners in BXE Capital. So we're really lucky to have such a dynamic team. And I'm going to let each of them introduce themselves. But before we get started, just a little bit of housekeeping here. So this call is being recorded. And if for some reason you need to drop off or would like to share this webinar with one of your colleagues afterwards, please feel free to reach out and we will be happy to forward the recording. Your phones have all been muted, but this is a panel. So if you would like to ask a question, you'll see a Q&A box at the bottom of your screen. Just feel free to type your questions as we go, and the panelists will address your questions one at a time. And then the full webinar will run about 1 hour. So we will have plenty of time for questions and answers. If for some reason we don't get to your question or you would prefer to ask it in private, just feel free to reach out, ir@bxecapital.com. So without further ado, I will have each of the panelists introduce themselves, starting with Josh Sroge. Josh, you want to take it away?
Yeah, sure. Thanks, Al. I appreciate it. It's good to be back here with everyone, with my old buddies, all 3 of you. It's good to see you. And thanks a lot for having me. Yet again, I'd like to say, so effort not to repeat myself, but also address the people who are new here. So I'm Josh, been in the Front Range for 25 years in the Denver area, originally from New York. And, I want to start out just by talking about how I got into this asset space, right? Because it is, even though technically 10 years old, it's still relatively new because it took a lot of years for it to gain momentum in the markets and in visibility. So I run a fractional CFO firm here in town, amongst other things, where we have a lot of CFOs and controllers working with companies. And we had a client back in 2016 named Bridge 21 that used Bitcoin as a method of cross-border payments. And that is one of the effective use cases, not only of Bitcoin, but of many different cryptocurrencies, is the ability to rapidly transmit and at low cost. And so that was back in 2016, before the well-known rally cycle of 2017. So after that client in 2017, I got a call to go work with Shapeshift, which has a large presence here in Denver, which is a crypto to crypto exchange, as their chief accounting officer. So worked with them through that rally cycle for about a year and a half, and then left there and took a little time off as what we call the bear market settled in for roughly 2 years. Worked primarily just on SaaS companies, but then I've returned now to work with Binance US, which is related to, an affiliate of, but not a subsidiary of, by the big global one, Binance.com. Binance US is one of the top 5 digital asset exchanges here in the States. And so that, and then secondly, I also know Josh for many years. And so I'm very pleased to be a part of BXE Capital. And we had connected during the last rally cycle and discovered that we both somehow had ended up in this digital asset space. So life is full of surprises, I like to say, and it's really great to work with them. And it's quite a roller coaster, right? We both, if you're on this call, maybe you've looked at the markets, maybe you've experienced some of the volatility, but also hopefully interested in the technology and how it's going to change the world around us, change settlement, banking, so many things, provenance, exchange of value, treasury reserve asset. You're going to hear a lot of these terms thrown around because really these assets are so fungible. There's so much use and transferability and things that we haven't, there's a lot that we haven't even invented or realized what their use cases are. Even in this last few months, people talk about DeFi a lot, decentralized finance. That's another big big area that I think is yet to be, fully realized. We're just on the edge. So, with that, I think there's things that are mature in some ways, right? We can go to marketplaces and look at values, and there's been price discovery, but again, there's so much more to unpack. We're still kind of, and I think Josh will focus on this too, is that we're still in the early stages. We're still in the, I just got the DVD in the mail with the AOL stamp on it. And apologies for any dogs barking in the background, but that's what it feels like. It feels like the dial-up point of the internet. And so, and by the way, let me also just quickly speak before this ends to exchanges, and that's where I work. And the digital asset exchange is a marketplace, just like to touch on some recent events involving stocks. It's a similar place where there's an order book, and you can place limit orders, market orders, instant buys, and so on with a select list, because we are in a highly regulated world here in the United States. A select list of digital assets and pairings. So, do some of your homework, some of your research, but also thank you for attending today, and we'll try to, be as educational and entertaining as we can be. And with that, I'd like to hand off to my friend over there, Matt.
Thanks, Josh. Yeah, by way of an introduction, my name is Matt Kaufman, live in Cheyenne, Wyoming. I'm a partner with the law firm of Hathaway Kunz. And in addition to being a partner with BXE Capital, a quick story about, I guess, how I got involved in this realm. Amongst my practice areas that I spend a lot of time in as an attorney are corporate business securities work, predominantly in the tech space, and had done that for quite some time. And back, as Josh just mentioned, kind of back in the last large cycle of 2017, leading up to that, in late 2015 and early 2016, we were seeing just a tremendous amount of interest in Wyoming as a domicile for what we now know as ICOs, initial coin offerings or initial token offerings. And folks in the blockchain space were figuring out that you could capitalize projects by going out on these exchanges and or just going out and offering your tokens for sale. And of course, there was a lot of thought at the time going into whether or not these offerings were regulated. Were they securities? How are they regulated if they are securities? And that's how I initially got involved, was because of the nature of our practice, evaluated quite a number of potential offerings. Of course, we at our firm quickly came to the conclusion that we thought they were securities. And a lot of people didn't like that answer in 2016 and 2017. Now, 3 years later, we know that we were right, because the SEC has since clamped down on a lot of those early offerings as being non-compliant securities offerings. But that really launched me into this area. And for those of you that don't know, Wyoming since that time has been by far the most aggressive state in the union, and potentially anywhere in the world, in terms of enacting both enabling and regulating legislation surrounding crypto and blockchain products. And so I've been fortunate. I was appointed by 2 different governors to a select committee of legislators and lay people here in Wyoming to help draft that legislation. And I have worked on over a dozen pieces of legislation that have been passed here in Wyoming to address a lot of those problems in crypto that we're talking about. One of which Josh kind of alluded to, and that is, there has for a long time been a major issue within the crypto and blockchain space about how do they access basic banking services. And so the state of Wyoming created a first of its kind financial institution called the Special Purpose Depository, the SPDI, or Speedy Bank as some people call it, to allow crypto or digital asset folks to stand up a new type of bank charter that doesn't have access to FDIC insurance, but want to make sure that it's regulated and still somehow ensures deposit reserves. And so I was fortunate, and our firm is fortunate, to represent Kraken, one of the large global exchanges, in chartering a first of its kind digital asset bank here in Wyoming. And we did that this past fall. And so it's been exciting to see kind of Wyoming play a role in that, and the legislation really move. And so as we talk today, I'll get into more of some of the regulatory things we've seen in this space, but it's a rapidly evolving landscape. And so it's been fun to be a part of. with that, I'll hand it over to Josh Finkleman.
Great. Thanks, Matt. My name's Josh Finkleman. I am the co-founder, managing partner of BXE Capital. And as Ala had mentioned earlier, we launched the first digital asset investment fund in the state of Colorado back in July of 2017. And we've been on the bleeding edge and educating and one of the folks out there leading the charge in this new technology, in this new asset class. My background, kind of how I came about this, I've kind of been an active entrepreneur since 2000. My background is fundamentally in accounting and finance, CPA, master's in finance, and prior to launching the fund, I was running a credit card payments company, and I was building out, very tediously the back-end infrastructure for that, and attaching to all the different acquiring banks, which is super laborious and difficult. And I was really fortunate in 2013. A good friend of mine was itching to grab lunch with me for some reason, and I went and grabbed lunch with him, and he proceeded to just go on a 2-hour diatribe about Bitcoin. and so, he really kind of piqued my curiosity. And over the next week, I did my own research, and given, I think, the unique optics of running a payments company, I really saw how blockchain technology, more specifically distributed digital ledgers, were going to be used to move value around the planet and really disrupt the payment space. And if you really pull back, this technology is really going to be so disruptive, and we believe it's going to be as disruptive as the internet. Because essentially, at its core, what blockchain technology does is you're taking software, math, and cryptography, and you're using it to basically replace people, trusted third-party intermediaries. So that could be payments companies, that could be remittance companies, banks. You can use these blockchains and distributed digital ledgers for so many different ways to basically remove trusted third-party intermediaries. And I think what we're starting to see, early on, the use case is sending value right to the internet. What we call MOIN, money over internet. So that's one of the kind of strong narratives of this technology is it'll enable us to send value through the internet. Much like we send data, right, via email through the internet. And we'll be able to do that, with very little friction, no intermediaries, and these transactions will settle in seconds for pennies. Now you can expand that out then, and as well, that's just one vertical of disruption. We're going to see money digitized, right? We're seeing a lot of central banks around the world start to work on and roll out central bank digital currencies. We're seeing asset management start to digitize assets and trade them, as Josh said, around some 400 digital exchanges around the world that operate 24 hours a day, 7 days a week, 365 days a year. They never shut down. And so it's our base case that this tech will eventually prompt all the exchange owners to digitize treasuries, equities, bonds, derivatives, everything, because if you think about it, they can trade these assets 24/7, 365, right? So last year, equities traded a little over 1,600 hours versus Bitcoin and other digital assets, which traded over 5,700 hours, right? Because they never stopped trading. So just from that standpoint, we really believe we're on kind of the early innings of this technological wave, of adoption of these digital assets and of this technology. Much like we saw kind of in the mid-90s for the internet, right? The internet era. We believe we're in a similar stage right now for, the blockchain era, for the digital economy, if you will. So it's super exciting times, but realize, we're in the infancy, right? We're in the beginning of this kind of paradigm shift. And it's super exciting, every, call it 20 to 30 years, you get kind of a paradigm shift in technology, right? We saw that with computers in the 70s, and then with the internet in the late 90s. And now we're seeing that with the digital economy and blockchain technology, whereby these paradigm shifts, they are not category killers, they're serial killers, right? In that they disrupt just such a wide swath of different verticals, as did computers, as did the internet era. And we believe we're on the cusp of seeing this start to take place with the blockchain technology and the digital economy era. So I don't want to bore everybody here. That's kind of my intro, and we'll put it back to Olive and open it up for Q&A.
Yeah, thank you so much to each of you. I think you all touched on so many different directions that we'll try to go into, but the place I'd like to start is we're sitting here in the beginning of 2021, and there's just this flood of news of institutional players moving in, a lot of movement. Some of you already touched on the central bank digital currencies. There's a lot of developments in various countries. So just from a very macro perspective, what's happening right now within the institutional space? Who are these players moving in? How is that impacting your specific arena in particular? And what are you seeing that's unique starting now in the last couple of months? And that's open to whoever would like to take that.
Yeah, maybe all three of us from our different backgrounds, if that's okay.
Great.
Josh?
Yeah, I could jump on that. There's the stuff that's in the news, right? The Michael Saylors of MicroStrategy and Square and folks like that. So publicly traded companies that are apportioning a piece of their corporate treasury, and that's in U.S. dollars, into something that's an inflation hedge or non-correlated, or so maybe there's some other thesis, but you've seen possibly some of that in the news. And then from a fund and trading perspective, there's a lot of folks just looking at this and saying, there's not, the price discovery isn't baked in, this cake isn't baked. We think there's a lot of upside in place for some of these assets to run. And then, the sort of third piece of that is the plumbing has been improved so dramatically from, say, 2017, 2018. Now, you could say, well, wait a second, Kraken was down this morning, right? And Coinbase has its problems. In my platform, they all have their issues. If volumes spike, the plumbing is still not perfect, right? But it's far improved. And so I think that you have those few things. One is awareness and comfort with the institutional players, and the second, just the improved piping and the investments in the space over 2018 to 2020. That's really, hopefully that will power 2021 in new ways.
Yeah, and I'll jump in here from my perspective. There have been definitely some major shifts with kind of the regulatory landscape and just how regulators view this space. I alluded in my opening remarks to the 2016, 2017 kind of ICO craze, and there's no doubt that there were bad actors in that bunch. And since that time, agencies like the SEC and others have clamped down through enforcement on some of those bad actors. But there were also an incredible number of good faith actors that rolled out incredibly meaningful and good projects. And so it's been really interesting to me to watch the conversation. Again, in 2016, 2017, everyone was just kind of waiting to see how institutions and regulators were going to embrace this space. And even 3-4 years ago, even 2 years ago, I think a lot of people investing in the space were sort of wondering, is regulation going to kill this thing, or is it going to go in a way that sort of squeezes people out? What's been fascinating to me is, of course, anything could happen, but so far we've seen just the opposite. We've seen regulators start to embrace it. Everything from agencies like the SEC, the CFTC, the federal agencies that regulate federally chartered banks are even giving signals that we're going to figure out ways to accommodate this new digital asset economy. And then all the way down to state levels, those signals seem to be changing. And so that's something to me that has really paved the way for a lot of new involvement and new engagement from people, because whereas even, like I said, even 24 months ago, people were very unsure of how this was going to be embraced. It's changing super rapidly, and it seems to be favorably. So I think that's just continuing to de-risk it and make it more accessible for a lot of folks.
Great. Yeah, and then from an asset management standpoint, let me pull back and let me kind of give you all our view, right? When you look at the macro kind of view of the world and what's happening, the big picture, right? So we have, we had this global pandemic last year that came out. And as a result of that, central banks, major central banks around the world, really rapidly expanded their balance sheet. They printed all this stimulus. And some of that stimulus went directly to people, but a lot of that stimulus kind of pumped up the markets, right? And to give you a sense for the magnitude of the level of stimulus that was printed last year to offset the negative impact of COVID, last year, the United States, the central bank printed a little over 20% of all the outstanding dollars that are in circulation just last year, right? So, all the big institutions are thinking about, well, wait a second, right? We've got super high debt to GDP, right, in the United States. Rates are pegged to near zero. And now central banks are printing trillions of dollars in stimulus. And if you look back historically at a similar time, right, it really equates itself very, very similarly to the 1940s in the World War II era, right, where the United States, same thing, had high debt to GDP, interest rates were pegged low, and they were printing vast sums of money, of dollars, to kind of fund the World War II efforts. Now, the interesting thing is during that decade, inflation ran rampant. There were years in that decade where the inflation rate was well over 10%. So institutions know this, and they're like, wait a second, this is kind of, 1940s, part two. And so it's driving institutions into inflation hedges, right? Which are scarce assets, i.e. gold and i.e. Bitcoin. Now, why is there such a recent demand and interest in Bitcoin? Well, when you really dig down into the mechanics of how Bitcoin operates, and that every 4 years, the inflation rate is cut in half. So it becomes more and more scarce, right? And Bitcoin has had 3 of these, what are called halvening cycles. Well, in the next halvening cycle in 2024, Bitcoin is going to be twice as scarce as gold. So if you're an institution and you're like, all right, I need to protect my purchasing value, right? My wealth. I don't want it inflated away. I want to find the scarce assets, right? I want to find good stores of value. And I think these big institutions around the world are starting to really realize that Bitcoin is a superior store of value due to its ever increasing scarcity, right? That's driving the narrative right now. So I just want to unpack that for all of you so you really understood at a macro view what's happening, right? And we're in the early stages of this. So it's our base case that really over time, Bitcoin more than likely is going to erode gold's value proposition, right? And oh, by the way, I can go down to Starbucks and I can use a third-party payment app and I can buy my Starbucks coffee with Bitcoin. You can't do that with gold bullion. I can also store $1 billion worth of Bitcoin on my cell phone. Nobody knows. What size vault would I need to store $1 billion worth of gold? Paradigm shift, right? That's why we're all excited about this, right? We're seeing a massive paradigm shift. But very few people really understand the fundamentals in this. Much like in kind of the mid-90s, very few people understood the magnitude of what the internet was going to bring to society, right? But that narrative is quickly changing.
Thank you. Yeah, and just one follow-up question sort of on this topic. I heard each of you mention scarcity, maturity in the space, certainly some developments on the exchange side. But I know that we as a fund have been focused on the 4-year cycle, and 2017 was a very bullish year. In your opinions, how is this similar to what we saw in 2017? What can we learn from the last bull cycle as compared to what we're seeing now? And then after this question, I know everyone's very excited to talk about the what's happening on Reddit with AMC and GameStop, but we'll go to that right afterwards.
Nothing like throwing current events in.
So can I hate to talk back to back, but
go ahead.
Hey, she threw out this, this perfect ball for me to hit out of the ballpark. So if you don't mind, this is my core area of expertise. So what's kind of similar in the 17 cycle versus kind of now, right? Well, this is actually wrapped up into our investment thesis, whereby it's our belief that approximately every 4 years, we see kind of a big growth cycle. And that is on the heels of the Bitcoin halving. And we saw that in 2013, which was after the 2012 halving. We saw that in 2017, which was after the 2016 halving. And now we're seeing the early stages of that in 2021, post the 2020 halving. And it's our view, and if you look back historically, what's happened when the Bitcoin halving happens, so when the inflation rate is cut in half, so when new Bitcoin's being issued approximately every 10 minutes, when that issuance rate is cut in half and demand is constant, right? You have a supply shock. And that supply shock creates a lot of price discovery in Bitcoin. And then that filters out into the entire ecosystem, digital asset ecosystem. And so we saw that play out, the mechanics play out in the 2013 rally cycle. We saw that play out in the 2017 rally cycle. And now we're starting to see the impact of that supply shock play out in 2021 with the price discovery, right? Bitcoin kind of went rapidly from, under 10,000 to over 40,000 actually in approximately like 6 weeks. Now it retraced a little bit, but those retraces are pretty typical. If you look back at the last rally cycle of 17, it had about 6 periods of retracement that were between 25 to 35%. And then, Bitcoin took another major leg up, right? And that's just kind of how the asset grows. So again, this is kind of our theory about this, but if you look back historically, that's how these cycles play out. And because Bitcoin is such a dominant asset right now, it has, over 65% market share, then really the market as a whole pretty much reacts to that big asset. So when there's a supply shock due to the halving, Bitcoin sees a lot of price discovery, then really that filters out into the rest of the digital assets, and you see kind of a rally cycle.
Thank you, Josh. And just to move the conversation forward, so just getting back to what's happening on Robinhood and TD Ameritrade. Josh Sroge, I know you were very excited about this earlier. And for those of us who aren't following it so closely, maybe Josh Sroge, if you can just give us an overview of what's happening. How is that affecting crypto markets? And
technical analysis? Yeah, sorry.
Yeah, no, just curious. This is a panel on cryptocurrencies. So how might this be influencing crypto markets, and what's the correlation here?
I think, before the call began, I think I joked a bit about how Doge is up to Dogecoin. Folks may not be familiar with it, but it's sort of a spoof coin that's based on a meme that Elon Musk has tweeted about. But in any event, there's so Wall Street Bets that everyone is probably familiar with now after the last 48 hours or 72 hours of that particular subreddit, and how it is being, the sort of short squeeze, and let's just say GameStop specifically, is attributed to actions arising out of conversations on that particular subreddit. there's someone on Twitter who is not really affiliated with it, but is using the Wall Street Bets name as WSB chairman or something, who asked questions about Doge, and apparently that drove the spike in the trading of Doge and spiked the value today. So there is a little bit of an effect on the crypto markets from all this sort of GameStop, retail versus hedgies kind of a theater that's going on this week. And it really is. I think this is going to be one of these fascinating business school case studies about how, you know, the markets, the traditional equity markets exist in a certain way, and you can do certain kind of options and then all trading and so on. And then you have this unleashing of these retail apps that are quote free, like Robinhood. And then you have social forums where people can coordinate. And so it's not so much market manipulation as it is just you're able to assemble a huge group of friends in a way that you weren't able to previously. Ultimately, is it beneficial or harmful to the crypto markets? That it's hard to say. I think that it's going to inevitably drive just more awareness of it, right? Because this is an emerging asset class that isn't fully valued. There isn't, 100% price discovery. Although now they say that, I can make fun of myself and say, oh, really? So there's a lot of price discovery around GameStop. And the answer is, what is the old saying? The markets can stay irrational longer than you can stay liquid. So I'll end it on that note.
Did it matter, Josh? Did you want to add anything to that?
Yeah, I'll just jump in a little bit. And for those of you that don't know the details of it, this has been such a fascinating thing to watch unfold. I mean, we truly have sort of a group of people organized via a social media outlet like Reddit, making a counterplay to major Wall Street players and pushing them into a money losing position. And now Wall Street's pushing back by trying to retribution to shut down some of those trading avenues so that these people can't push out their short plays. And it's just fascinating from a regulatory perspective, because I personally think the effect that this is likely to have is people will, as Josh just alluded to, I think the awareness is going to be driven up. I think people will start to realize the true utility and attractiveness of things like decentralization and decentralized exchanges and protocols where you can interact with other users in ways that major market players don't have some unfair advantage to close off access points or to affect even regulators in a short time frame. So I think to steal Josh Finkleman saying, I think this kind of event leads to paradigm shifting awareness from people that, wow, we have some major problems when certain market players have that kind of access to regulators and to what we call on ramps and off ramps into the securities markets. And is there more fairness in crypto right now? I don't know. Maybe I'm sure that's a question we could debate all day, but there's certainly a case to be made that it's a fresh start and it gives the little guy a chance. So I think it's going to be an interesting conversation.
Great. Yeah. And another question while we're on the topic of current events, I think this is an interesting one. So someone asked recently, an NFL football player asked to be paid in Bitcoin. I see Josh Sroge provided a practical answer for how would you recommend an average Joe does this to be paid in Bitcoin, that is. But I think just to expand on that question, I think we are seeing more of these practical applications and use cases going forward, whereas before it was really viewed more of as a store of value. So just opening it up to the group again, what other sort of new applications are we seeing, maybe not specifically with Bitcoin, but also addressing this question with, more individuals are actually looking to move their assets into fully digital asset usage. So
not to speak twice again, but maybe I'll jump in really quickly on that because I've spent some recent time dealing with that very question. So it's sort of an indirect answer to the question about the average person wanting to be paid in Bitcoin. We have received at our firm a number of questions from people about the status of Bitcoin as legal tender, just like the US dollar, and how does Bitcoin or any other cryptocurrencies status affect an individual or institution's ability to transact in it. And we've done some digging on that. And I mean, interestingly, everybody knows that You look at the back of a dollar, it says legal tender of the United States. All that really means from a constitutional perspective is that the government has to accept that for payment of taxes. It really doesn't mean a lot with respect to individual private entities and how they may or may not transact. And so I think that's going to be, again, a very interesting and evolving question. What if people demand to be paid in something besides dollars? Now, can they be forced to? Probably not. But are there avenues to transact in that way? Absolutely. Our firm just recently spent some time working with a couple of clients developing promissory notes and loan instruments based, solely in Bitcoin. And how are those transactions accommodated? Are they regulated by the Uniform Consumer Credit Act? All those types of questions are being brought into the light now. And I've been surprised at some of the answers that I think there's a lot more flexibility than maybe people realize. So I think it's going to be interesting going forward. Again, we don't have all the answers. It's brand new, and these questions are brand new, but it's interesting.
Yeah. So one of the trends we're seeing a lot of trends in the digital economy, space. One of the really big popular trends and themes that's gaining massive, traction is our stable coins. So there are digital stable tokens like Tether or Paxos or USDT, and they're basically digital dollars, right? They're digital tokens that are pegged to the value of a dollar, so they hold their value. They're stable, and more and more people and companies are starting to use these stable tokens to transact on a daily basis, because candidly, making payments through ACH or through, say, wires, right? It's expensive, it's cumbersome. You go through these third-party intermediaries like the Swift network. If you're going to send an international wire, right, that'll take a couple days. You're going to pay, depending on the amount you're going to send, you're going to pay a lot. Well, you can basically transact with these stable tokens like USDC, and you can send USDC hundreds of millions, billions of dollars anywhere in the world. It'll settle in a couple of seconds, and you'll pay $1, $2 transaction fee. So I think, people are really starting to realize, like, wait a second, leveraging these stable tokens and distributed ledgers, blockchain technology is much more efficient. It's a much easier way to transact, conduct business, and send value around the world. So we're seeing just a tremendous amount of traction right now in stable tokens. And, I mentioned earlier, you're going to see, central banks start to digitize the yuan and the yen and the dollar and what have you. That's coming. And that's just, it's not now if, it's just when. Right. I mean, China right now is testing their digital currency in various cities. They very well could roll that out at some point this year or next. And then all the other central banks are going to follow suit. Right. And so we're just going to see this, this big migration over to digital currencies, full usage. Right. And central banks digitizing their currencies is going to drive really the world to move into the digital economy. So we're just all, candidly, we're all early pioneers in all of this, right? Much like the early entrepreneurs in kind of the mid 90s, early 90s of the internet. And we know how that, narrative played out. So it's, super exciting.
Yeah. Who's going to be, oh, sorry.
Oh, no, go ahead.
Who's going to be AOL and who's going to be Amazon? That'll be
right. That's the big question.
Well, and Josh Finkleman, I think this one is for you as well. Can you speak to the Bitcoin earthquake that is apparently going to take place in the next week due to a $4 billion Bitcoin options expiring? This is referencing a Forbes article. If you could just explain what that means.
Yeah, I mean, so, you've got these CME, right? Chicago Mercantile Exchange, where you have periods where these options expire and candidly, the asset now is like $640 billion market capitalization. So to be candid, like these, the expiry of certain large chunks of options in my eyes has become more and more muted because the liquidity has gotten larger and it's not global. So as the asset class grows in magnitudes, orders of magnitude, any one single event like that is just becomes more and more muted, marginalized. So we aren't really concerned with that. As well, anybody who's been investing in this asset class knows this is the most volatile asset class in the world. Right. I mean, you get price swings, Bitcoin of, 10, 20% of altcoins. We've seen price swings of, Dogecoin today, right? Up 200%, Josh. Is that what it is? Right. Yeah. So, and why that is because especially the altcoins, they have much less liquidity. Right. So any capital flows in and out of these, it's over exasperated because just there isn't a ton of liquidity in them. But as the ecosystem grows and as more liquidity comes in, if they, more institutions come in and they create derivative products around that, they're going to start to dampen the volatility. The other thing is there's a tremendous amount of leverage that sits on top of all these digital assets, and unfortunately, and I'm not going to name exchanges, Josh Sroge, but a lot of exchanges, they offer 50x, 100x leverage. It's crazy. And so you have all these day traders that are levering up 100x, and it just creates a super high volatility environment. Right. But, it's our belief in the long run, as more institutions come in, right, as the liquidity grows, that will dampen the volatility in the space. But it'll take some time for that to play out.
Right. Yeah, like any emerging asset class, right? As the discovery occurs, there's so many pieces of information that play into either the volatility or its infrastructure that plays into the volatility, right? But you used to be able to move the market a lot more in Bitcoin. You see, you could say, Josh, it's like you still see these 20% carve-offs, but it doesn't move as much from any specific event like it used to. I think there's a lot of underlying things that are happening in terms of large traders as opposed to just a piece of news. Yellen says something and it did affect the market, but not as significantly as I think it used to.
And listen, let me just warn everybody. You think there's high vol now? Wait till the Fed comes out with their next stimulus package. Oh. Right? Wait till they come out with another couple $1 trillion, and that flows into the markets and the day traders. You haven't seen volatility until you've seen that.
And are they going to get Robinhood still?
Yeah, and listen, what that'll do is what the central banks are doing is they're gonna juice up all the financial markets. Really, we saw that last spring, right? When COVID kind of hit, we saw that liquidity event in March, and then they just turned the money printers on in April, May, and June. It was just a crazy V-shaped recovery. Well, the major central banks are slated to do another big bout of stimulus this year. When that hits the financial markets and the digital asset space, you're going to see some fireworks.
And just switching gears a little bit, Josh Sroge, maybe from an exchange standpoint, or Matt from a legal standpoint, someone asks, what happens to Bitcoin assets that are in wallets that can't be opened because passwords forgotten by the holder, or whatever the situation may be? Maybe one of you wants to take that one.
I can speak to part of it and just say that's, one of those, what do they call it? Undocumented feature of a particular piece of software. Unfortunately, that is one of the features of it, right? Is that there's an immutability. There's no central repository or authority to go to in the event, oh, I missent, my asset from one place to another, or I've locked it. In that specific use case, it was someone had an encrypted drive, I believe, or encrypted wallet program, right, that gives you a certain amount of guesses at the password before it locks permanently. And so that's not a feature of Bitcoin. That's a feature of the piece of software or wallet software that they're using in it. But Bitcoin itself, yes, if you somehow lost your private key or your recovery seed, yeah, you're sorry to say, I'll just say it's your SOL. So there are some risk features there, and you know what that drives is all the pick and shovel products, right? All the ancillary products around the space that, you know, either it's an exchange that can custodialize, or a fund that you invest through that it has its own custodialization, or there's actually custody providers. There's, you know, apps that'll help you, but at the end of the day, if you're self-custodializing, which is a great feature of this, it is on you, right? Just like you'd have to remember a password to your Excel document that, you know, you use to control, you know, keep track of your checking account.
I feel like I'm going to be the boring lawyer and give everybody a disclaimer here, but there's a saying in crypto: not your keys, not your coins. And that's like Josh just said, that's a blessing and a curse, because I feel like I warn people all the time. While it's an amazing thing about crypto and Bitcoin that you can self-custody and hold your own assets, that is a risk. That if you lose access to the wallet, lose the private key, whatever the passwords, whatever the case may be, there's not really anybody to have recourse against. Conversely, we often talk about that's one of the value propositions of a fund, like BXE is, you don't have that responsibility. Guys like Josh Sroge with exchanges, they take on that responsibility to hold and custody people's crypto. So it cuts both ways. It's both a good thing and a bad thing, but you got to know what you're doing.
Yeah. And on the topic of custody, Matt, if you can just expand, you had mentioned the special purpose depositories and what's happening in Wyoming. How will that affect custody and transactions? Maybe you can expand a little bit on that.
Yeah, so real quickly, the theory behind what Wyoming created and the special purpose depository is, again, so far, one of the problematic regulatory agencies in the US surrounding crypto and blockchain is the FDIC. And the FDIC has made it very difficult for traditionally established banks to be able to take on those kinds of deposit accounts, because they just don't know what that means. And the OCC, the other federal regulatory agency, for a long time was kind of silent, and there was some confusion there as well. So even though the OCC has recently provided some new guidance that's beneficial to blockchain crypto, the FDIC is still, there's a lot of uncertainty there. So what Wyoming did was create this banking mechanism where if you are a digital asset company and you want to establish a bank, since you don't have access to the FDIC, this particular bank, they can take and hold crypto digital asset deposits, and they're required to have 100% reserve backing at any time. So they can't, there's limitations on rehypothecation, on loans, lending off of customer deposits. It's basically a way to ensure customer safety and deposits without the need for FDIC insurance. And doing that in a digital asset format, allowing these entities to hold and take custody of digital assets, is kind of the new innovation. While that seems to be coming rapidly across the country, all kinds of states are now allowing different forms of digital asset custody. Wyoming's clearly still a leader in that respect. And so, again, that's a big deal because it commercializes custody. It creates a professional level for custody. And that again, has been mentioned several times today, sort of that back end plumbing is continuing to grow, and there's more and more optionality for people.
Thanks. And one more question here. Someone asks, curious about the thoughts about the transition from currencies to NFTs. Seems like this is effectively the transition from protocol level innovation to application level. Any thoughts?
Yeah, I guess I can throw down on that. So, NFTs, non-fungible tokens. So, like CryptoKitties, I don't know if any of you remember that back in 2017, the rally cycle, they made these unique CryptoKitties that no two were identical, and you could buy them, and they were, so you could cryptographically prove that they were a unique kind of art form. And so, look, that's just one of 1,000 different applications of this technology, right? Is digitizing things of value. synthetic assets. You're going to see a lot of that, right? There are some decentralized derivative exchanges like Injective or Perpetual, and they are creating synthetic stocks right now. So you can trade a synthetic Tesla stock, a synthetic Apple stock. That's coming, right? So all these tradable assets are going to be digitized, as I said earlier, and traded across these exchanges and traded 24/7, 365. So there's a lot to unpack, and you just have to realize that, you know, this technology is super wide spanning, and it's not just applicable to asset management or stores of value like Bitcoin or currency. You've got smart contracts, right? You've got NFT technology, synthetic assets. You've got so many different things, much like, you know, with the internet, right? You've got, you know, Google is very different than Amazon, right? They're completely different, and you've got a really robust internet economy of all these different companies that do different things. Much like that, we have you know, wide breadth of all these digital assets that are leveraged to do different things. Some are leveraged as currency. Some are leveraged to be a good store of value. Some are leveraged to be a decentralized exchange. Some to be a smart contract platform, right? So, you know, you've got over 8,000 different tradable digital assets right now. Right? It's super robust. And again, this is the early days, but just realize, you know, much like the internet economy, this is going to be the digital economy, right? Where everything is becoming digitized, and it's a big paradigm shift. And we're just, I mean, there's just so much to unpack. We're literally just scratching the surface in this discussion today.
Well, and I'm glad you said that. We only have a couple of minutes left, and in the scratching the surface bit, I'm curious if, you know, it's still January 2021, what sort of predictions that each of you have for the rest of the year? How will this unfold? What are you excited about? Let's close out on a positive note and some forecasts.
Josh, you go first, buddy.
For forecast, it's going to be bumpy. I think, you know, in the digital asset space, it's teeing up to be one of the most exciting years. You know, besides the things Josh mentioned, like the potential $2 trillion of additional stimulus and those effects there. And as Matt talked to regulation, I think we'll see some more regulatory guidance coming out, and that always provides comfort to institutional players, as well as this is the programmable, as it were, rally cycle, right? This is the year. So I think, you know, all these events are going to, you know, create a confluence, and we're going to see a lot of exciting developments, as well as, you know, greater acceptance by corporate treasuries in the public sphere, and more use cases, right? And Coinbase IPO, you know, so I think we have a whole lot of factors, you know, building up to a pretty exciting year ahead of us.
Matt?
Yeah, and on the legal front, I would say I'm again really excited to see what's unfolding. The Securities Exchange Commission, the SEC, just launched a new section within the SEC oriented at financial technology, in part to deal with and address some of the new technology and applications that we're seeing in space like crypto. So I think there's been adjustments that have been made to some extent and are being made at a regulatory level to start to be able to accommodate and address some of these new questions. So I think that's really interesting. We're also just seeing an increasing sophistication in the users and kind of a comfort with a lot of the users, I think, transacting in this new space. And I think that's, again, really interesting, sort of getting back to original thoughts surrounding sort of property rights and individual freedom to transact and contract. I think it's really interesting to see how those kind of principles start to be applied to the digital asset context. And there's so many new ways that people can transact and deal with each other within these digital asset frameworks. I think as that continues to grow and we have this regulatory warming to it and more legal certainty created, I think it's incredibly bullish on the space. So I'm excited to see more of that movement. I think we're starting to see, even though most people wouldn't say this is a good thing, we're starting to see more litigation in this space, which I actually think is a really good and healthy thing, because it helps courts prepare to grapple with this. And that's what people want in any, I mean, that's still one of the reasons the US is such a favored place for businesses. We like our legal and regulatory certainty, and it creates aspects of stableness to the market. So I think as that continues to grow, people get more comfortable, and we just continue to see people pile in.
So I know it's going to be a shocker, but I'm bullish on this year. So look, we're it's our belief we're at the tipping point, right? This, we've seen PayPal roll out digital currencies, right? Square, Fidelity, massive firms like Guggenheim, and Ray Dalio actually came out today about something. Paul Tudor Jones, Raoul Paul, Mike Novogratz. Chamath Palihapitiya. These are iconic investors worth billions of dollars, managing tens, if not hundreds of billions of dollars that have moved into the space. You have the OCC, the Office of Controller of Currency, last year, which approved all federally chartered banks to custody cryptocurrencies, right? There's just there's no way around it, right? We are at the tipping point where we're going to see this bubble up over, and we're going to see, kind of the beginning of mass adoption of digital assets around the world. And you've got a perfect environment for it, right? You've got a backdrop of a global pandemic and of massive central bank money printing, which is driving investors into Bitcoin as an inflation hedge and into digital assets as a new asset class, right? I was kind of talking to my partners before everyone got on, and we were talking about, the 60-40 equity bond portfolio is dead, right? Interest rates are nothing. No one's going to be buying bonds, right? You aren't keeping up with inflation. So it's now prompting institutions to look for alternatives for bonds. Some of that capital is going to go into alternatives, and it's going to go into the digital economy, right? These digital assets. So this is the beginning. So we're, very bullish on not only, short term, but midterm and long term. We feel we're going to see, a tremendous kind of tailwind over the course of the next decade for digital asset prices, because you have global adoption, right? You just have, now millions and tens and hundreds of millions of people onboarding into the digital economy and buying into these assets. So it's super opportunistic if you're paying attention, and if if you're comfortable with that volatility, right? Which no doubt we'll see, for some time to come.
Yeah, I'm with you, Josh. I'm also equally bullish and excited about the year ahead. Thank you so much to all of our attendees for joining today. You had really thoughtful questions. I hope you found this conversation engaging. You have each of our panelists' emails on your screen here. Feel free to reach out, or you can follow up with any questions that we missed to ir@BXE Capital. Thank you to Josh, and Matt. Really enjoyed this conversation. I thought it was a lot of fun, and
Thank you.
hope to see you
Thank
all
you.
again soon.